Welcome to our comprehensive guide on stocks and the U.S. stock market. Understanding this world is crucial for anyone interested in finance or investing. What is a stock? Simply put, a stock represents a fractional ownership in a company. The stock market is where these shares are bought and sold. The U.S. stock market is dominated by major exchanges. Let's look at the two most important ones, the NYSE and Nasdaq. The New York Stock Exchange, or NYSE, is the largest stock exchange in the world by market capitalization. It's known for listing many established blue-chip companies. The Nasdaq is the second largest U.S. exchange, famous for its strong focus on technology and growth companies, often being the hub for innovation. Why do companies issue stocks? And why do investors buy them? It's a mutually beneficial relationship that drives economic growth. For companies, issuing stock, known as an initial public offering or IPO, is primarily a way to raise capital. This funding is essential for expansion, research, and general business operations. For investors, buying stocks offers two main benefits: the potential for capital gains, meaning selling the stock at a higher price than purchased, and receiving dividends, which are regular payouts from the company's profits. The constant movement of stock prices is what makes the market dynamic. But what exactly drives these changes? The most direct influence is company performance. Strong earnings reports, successful product launches, or positive future forecasts often lead to higher stock prices, reflecting investor confidence. Broader economic factors like interest rates, inflation, and unemployment figures also impact the market. Additionally, market sentiment, which is the overall attitude of investors, plays a huge role. To gauge the health of the overall market or specific sectors, we rely on stock market indexes. The Dow Jones Industrial Average, or DJIA, tracks 30 large, publicly owned U.S. companies. The S&P 500 is broader, tracking 500 large-cap U.S. stocks and is often considered the best measure of U.S. stock market health. The Nasdaq Composite Index is a market capitalization-weighted index of all common stocks traded on the Nasdaq stock market, heavily weighted towards technology and high-growth sectors. Market trends are typically described using two animal metaphors, the bull and the bear. A bull market is characterized by rising stock prices and a general sense of investor optimism, where buying activity outweighs selling. Conversely, a bear market is when prices are generally falling, characterized by investor pessimism and a focus on selling over buying. Investors come in many forms, each with different goals and strategies. Long-term investors aim to buy and hold stocks for years, focusing on fundamental company strength. Traders, however, aim to profit from short-term price fluctuations. Institutional investors manage large funds like pensions and mutual funds, while individual investors are simply everyday people managing their personal investment portfolios. Finally, remember that the stock market involves risk. Stock prices are volatile, and there is always the potential for loss of capital. Always invest wisely and never invest more than you can afford to lose.